Okay, so I'm going to put out something else that's a little bit different. That as far as economic indicators in a canary in a coal mine, and in the short term, there might be some serious downturn in the markets. For real, not a drama freak, none of this, buy gold, buy silver, the end is coming. But there's probably going to be a turn down. There's a few things, and this is like the standard stuff right off the major media, more or less, but you can't ignore it. The major media does report stuff. It's how they emphasize things sometimes, how they editorialize things and kind of twist things a little bit, where I disagree. But they'll put the facts out there, but you can find 50 million opinions too. But one thing that came out recently, and actually it's been out for a while, it's called the Citigroup Economic Surprise Index. Basically, it's a index of what do we expect to happen and what actually happens with economic indicators. And if they're better than normal, they're better than expected, it's a surprise that, hey, things are going great. And then if they're worse than expected, it's like a downturn. It's like where things are going bad. But this economic surprise indicator does normally, in normal times, have a high correlation between that indicator and the general markets, the S&P. And recently, it's like the S&P is flying up, and the surprise Citigroup economic surprise indicator is flat. It's flatlining. So it's like there's a total disconnect. And actually, if you want to put something in very 101 simplistic sense, because sometimes, and this is where Doctor Doom, the original Doctor Doom, comes into play, because it's almost like anytime, nothing's an historical event until something out of the ordinary happens. Basically, all markets are basically an accident waiting to happen. It's almost like you might want to call it that. I mean, it's a negative type of viewpoint, but if things have been humming along for so long, you're almost like better off waiting like a cat for things to crash. And it looks like the metals have crashed. I mean, the precious metals actually look like the better buy right now. They look good at a good buy at 27 or 28 or 26 too. But, here they are at 24 or something. But the metals already have crashed. And if you look back in 2008, 2009, it seemed like the commodities crashed and the markets crashed. Now, I don't know about a serious, market crash where there's going to be a 25% correction or more or something, but it does look like, it's not a theory or conspiracy theory, it does really look like a solid fact that the Federal Reserve is pumping up these markets. It's, I mean, God, and how much longer are they going to be able to do that, or are they going to be even willing to do that? Because basically they could pull the plug on everybody that's invested in these markets, pension funds and whatever's out there, 401ks, at any time they want. But this Citigroup Economic Surprise Index is so far disconnected from the S&P 500 right now that it's showing you, it's almost like demonstrating to you, like a postulate, a proof, that something else is holding up these markets other than true economics. It's actually the policies of the Federal Reserve. Now, there's one thing that's coming up here that just actually came out. They call it the Global Canary in the Coal Mine, and it looks sick. It's about major export data coming out of South Korea, because South Korea is all linked in with China and the whole Asian theater. South Korean exports only grew by 0.4%, but they were expecting 2%. So it's like far short of its expectation. But usually when you see this report hit first, where it's a downturn, you'll see the rest of everything hit a downturn. Now, what does that mean to the metals? As far as these metals have pulled back, I would not expect maybe further pullback in them. It's like we're seeing the general markets going up. We're actually seeing real estate going up, and the metals have been going down. But actually, the metals have not been doing too bad when you're looking over the last several years. They're doing okay, really. But The one thing I expect, though, is there could be a complete turnaround now. I've been harping on this stuff about war in the Middle East. I don't know when this is going to happen. Actually, to tell you the truth, it could have happened in 2007. I think Dick Cheney had a plan to do something. I think it was missing nukes they had in 2007 was a plan to do something with Iran. There's so much stuff that can happen, but if there's something like that happens and if something crazy happens in the Middle East, the whole scenario, you're going to see the markets go down, you're going to see oil go up, you're going to see gold go up. But right now, nothing is actually holding up these markets other than Federal Reserve policy. And I'm talking about not just the S&P 500, but I'm also talking about the real estate market. So, I think inflation's going to hit pretty soon. But I want to say something else. I want to start doing some more practical updates on things because, my field was basically accounting and finance and that type of stuff. And, I always was reading into all the financial reports for years and doing advanced spreadsheets and all that kind of stuff. And basically business models for people and pro formas and, you name it, that type of stuff. So I tend to do a lot of these updates. But I don't think these type of updates are as important to the average person as maybe some how-to updates on doing various things or how to save a few dollars here and there. So I'm going to try to put out more updates like that because I think they're truly beneficial to people. But for this update here, I'm just talking about is, it's like you do know this. I mean, you do notice, Greg Mannarino, for instance. Actually, this guy, Greg Mannarino, is not too bad. Actually, he's one of the silver pumpers or pump and dump. I don't think he's a pumper, but he's more factual than the rest of these guys I see on the internet. I'll actually say that about him. He's a lot more factual. But it is true that it's no conspiracy that the Federal Reserve is pumping up the stock markets. They are. I mean, it's Federal Reserve policy, and it's Federal Reserve policy that it's keeping up the S&P 500 and it's also keeping up the real estate market. And it's Ben Bernanke can change that with a word or some word that these guys interpret a certain way. But the other thing that can change it is conflict in the Middle East. And it's not only the markets that can get fearful and people could pull money out of them or whatever, but I think the real estate market would be greatly affected by conflict in the Middle East because anytime there's uncertainty in the world, people don't tend to buy big ticket items. They tend to get they're like a tortoise. They tuck their head and their feet inside their shell, and they just kind of hibernate and don't do anything. That's where gold goes up and things like that, or maybe even silver, because they tend to hoard for safety. What's the big safety out there? And this is the thing I don't know if this is going to be coming up, but looking at this last terrorist event with Boston Marathon bombing, to me it means that there's something, I don't know, I think that was more like a planned event somehow, not just by the people on the outside. I know when you look at CNN, it doesn't look that way, because I've looked at CNN, they don't show you like the other backpack that the other guy was wearing that blew up, that wasn't one of the two guys they caught. They don't show you that on CNN. That's not news, But just looking at, since this event occurred, it could lead to the same kind of scenario we had with 9/11, which led to the war with Iraq. Now, obviously, if they go after Iran, they're going to have to get Syria first. But as we know, Vladimir Putin's not going to do anything about that because all those guys on the top work together. As I pointed out, they're all screwed up. But as far as the short term, we might see a market turn down in May. We might see it. It might be coming up pretty soon. I'm not saying anything catastrophic, but there might be a market turn down. Actually, a lot of people, when they see the curve going up, they predict, the Dow's going to go to 16,000 or whatever. They keep predicting higher and higher, but that may not be the case because everything in the world is interlinked. In this report that came out about Korea, basically showing that their exports are far below expectations. They're 0.4% versus, basically a fifth of what they expected. They expected 2% growth. They got 0.4%, basically a fifth the growth they expected. And also, this Citigroup Economic Surprise Index is basically flatlining, and yet we got our stock market going like this. It's flying upward. It's basically this Economic Surprise Index has been flatlining all year. Or actually since maybe I guess December of 2012. And here we got the markets going up and up and up. There's a major disconnect. And actually, if you look back, the last time there was a major disconnect like that was in 2011. Just to talking about the Citigroup Economic Surprise Index. The last time there was a major disconnect like that was in 2011, and it looked like the Economic Surprise Index was way the hell down, way below. It's not actually, right now it's even more disconnected, but the Economic Surprise Index was disconnected then. And then what happened in August 2011? Markets tanked severely for a short period of time. So there might be something, actually if I don't have any equities into Dow or S&P. If I did and I was up on that stuff, I'd dump it today, tell you the truth. I would dump it right now, beginning of May. Goodbye, and wait. Because the markets, if you put it simple, 101, Dr. Doom kind of thinking, the markets are an accident waiting to happen. Wait for the accident, stay in cash, wait for the accident, and then don't be afraid to get in there. But, sometimes you don't want to bottom fish, but if you get in there a lot lower than everybody else, you might be doing okay. But it looks like we got two things here that are major short-term indicators that the markets are bad. Is this Citigroup Economic Surprise Index is flatlined while the markets are way up there. That should mean that the markets should be ready for a downturn. Then the other thing is the April 2013 report about South Korean exports being way short of expectations, increasing way short of expectations. They expected a 2% increase, they got a 0.4% increase. That usually is a leading indicator of what other reports are going to be coming out from China, Indonesia, Singapore, India, whatever, because or in Japan, because everybody in that area, it's like if Korea's not exporting to them as much, that means there's a slowdown throughout the whole area. And, that could be bad for the commodities, but then again, maybe the solution's going to be more QE, because what is Japan embarking upon? Unprecedented QE, 1.5 trillion yen, right? So, the reverse might be coming up. The precious metals is still the place to be. It's been a long-ass correction period, but it's going to play out. I think the two places there's an accident waiting to happen is in the S&P 500, the Dow, all the equities in America, the general equities in America, and maybe the real estate market. I would not necessarily buy into the real estate market now unless you find a house that you want. I mean, not for investment purposes too much. I mean, unless you're a specialist in it, but if you're just a novice, I would not just be buying real estate at high prices right now because it's been going up. If there's any kind of problem in the world, which I think that's something coming up. I think there is going to be something coming up in Iran. They've been talking about it so damn long. It's, it's getting to the later stages now. I mean, once Syria is toppled, green light is on for Iran. That's really what's going on. Not playing politics here, not playing like, the USA is correct on this or anything. I'm just saying that's really what's going on. So economically or fiscally or whatever how you want to call it, investment-wise, you're in the right place if you're in the commodities, because if there is a war that occurs in the Middle East soon, commodities are going to go right through the roof. Because when you add in the inflationary pressures from all the quantitative easing that's going on, and you combine those two elements, commodities are going to go right through the roof. So what you've been seeing in April is going to probably turn around 180 degrees, and we're probably going to see The beginning of a bubble in the other direction a lot faster than you think. Global events can change things, but two things, like I said, short term that say that the economy's going down, the markets are going down in general, is the report from South Korea's exports and that Citigroup economic surprise indicator, which is pretty much flatlined.